Hey everyone, and welcome back to the Book Summary podcast channel. So today we're diving into a book that promises to demystify the world of day trading. It's How to Day Trade for a Living by Andrew Aziz. And if you've ever kind of wondered, what it takes to make a living buying and selling stocks,
Yeah.
within a single trading day, then you're in the right place.
Yeah, this book is a really great practical guide. Especially I'd say for anyone who's just starting out. It's filled with strategies, real world examples, and it even addresses the psychological aspects of trading, which I think a lot of people kind of overlook when they're first starting out.
Right, yeah, for
Yeah.
sure. And speaking of that hype surrounding trading, Aziz starts the book with a pretty eye-opening comparison using Google Trends data.
Yeah, I love that.
It was really interesting.
So figure 1.1 shows how searches for COVID-19 and stock market spiked together during the pandemic. And what's fascinating about that is it really highlights, I think, the emotional side of market behavior. A lot of people kind of rush into the market during times of uncertainty, and they're hoping to make a quick buck, but without a solid understanding of the risks involved.
Yeah, I feel like everyone kind of became a day trader overnight almost.
Yeah.
Um, and it actually reminds me of something else that Aziz points out in the introduction. He includes this 2016 Amazon review, Figure 1.3, where someone praised the book for being relevant even years later because he keeps his strategies updated. So it seems like adaptability is really key in this ever-changing market.
Absolutely. What worked 5 years ago might not work today. Markets evolve, trends shift, new technologies emerge. Aziz really emphasizes that successful day traders are constantly learning, adapting, and refining their strategies to stay ahead of the curve.
Okay, so it's not like a set it and forget it kind of thing. You can't just learn one strategy and expect it to work forever. So it's really about continuous improvement and being able to adjust to new market conditions.
Exactly. And that brings us to one of the most important takeaways from the book. Day trading is not a get rich quick scheme. It's a serious business that requires dedication, discipline, and a solid understanding of risk management.
Yeah, and he actually lays out 10 essential rules throughout the book.
Yeah.
And he really hammers home that point that day trading is not easy. He even makes this humorous comparison to social distancing. He says that you should social distance from those get-rich-quick schemes in the stock market, just like you would from someone coughing during a pandemic.
Yeah.
And he includes a little graphic for this figure 1.4.
I love that. It's a funny analogy, but it drives home a crucial point. Approaching day trading with unrealistic expectations is a recipe for disaster. It takes time, effort, and a willingness to learn from your mistakes.
Totally. Okay, so let's unpack some of these essential rules that Aziz outlines. So rule number one, day trading is not a get-rich-quick scheme. We've established that. Rule number two, it's not easy. It takes serious commitment.
Yeah. It's not something you can just dabble in and expect to become an overnight millionaire. It requires a deep understanding of market dynamics, technical analysis, and a disciplined approach to risk management.
For sure.
Well,
And he's adamant about not holding positions overnight, even if it means selling at a loss sometimes. Rule number three, why is that so important for day traders?
Well, by closing all positions before the market closes each day traders are limiting their exposure to overnight risks. News events, economic data releases, or even geopolitical developments can significantly impact stock prices overnight. And day traders aim to avoid those unpredictable swings.
Okay, so it's all about managing risk and protecting your capital. That makes sense. And speaking of risk management, that seems to be a recurring theme throughout the entire book.
Absolutely. Aziz dedicates a significant portion of the book to risk management principles. He emphasizes that successful day trading hinges on managing risk effectively, finding those low-risk entries with high potential rewards.
hmm And that's where his minimum win-loss ratio of 2.1 comes into play, right? Rule number five, it's all about protecting your capital and making sure your wins outweigh your losses.
Exactly. A 2-to-1 win-loss ratio means that for every dollar you risk, you aim to make $2 in profit. This approach helps ensure that even if you have losing trades, your winning trades can offset them.
It's a smart strategy. It kind of forces you to think carefully about your risk tolerance and your entry and exit points for each trade.
For sure. And then that brings us to rule number 6, where he reminds readers that, your broker is just there to execute your trades. It's your responsibility to manage the risk.
I like that. You are the captain of your own trading ship. The broker is simply the tool that allows you to navigate the market, but you're the one making the decisions about where to go and how to get there.
Exactly. So you need to develop those risk management skills, even if you're a master of, all the different trading strategies out there.
Right. And speaking of strategies, let's talk about rule number 7, focus on stocks in play. So what are stocks in play, and why should day traders prioritize them?
So these are stocks that are experiencing high relative volume. Driven by fundamental catalysts, they're the ones that are likely to have significant price fluctuations throughout the day, creating opportunities for day traders to capitalize on.
So instead of trying to predict the movement of the entire market, day traders are focusing on individual stocks that are already showing signs of volatility and momentum.
Exactly. It's about identifying those pockets of opportunity where you can potentially make quick profits.
Okay, and he obviously gives specific examples of how he identifies stocks in play, using watch lists and scanners. And he shows screenshots in the book, like figures 4.2, 4.3, and 4.4.
Yeah, he does. He shows how he uses what he calls gappers watch lists to identify stocks that are gapping up or down significantly from their previous day's closing price. And he uses scanners to track high relative volume and potential momentum throughout the day.
So it's a combination of pre-market research and real-time monitoring to spot those opportunities.
Yeah.
It's a lot of work.
It's a bit like being a detective,
Yeah.
searching for clues and patterns that can indicate profitable trading opportunities.
Yeah. And speaking of patterns, let's move on to rule number 8, where Aziz compares experienced day traders to guerrilla soldiers. That's a great analogy.
Yeah.
It's all about being quick strategic, knowing when to enter and exit a trade, and not hesitating.
Exactly. Experienced traders are decisive and efficient. They identify opportunities, execute their trades, and move on to the next one, adapting to that ever-changing market landscape.
It sounds like it requires a certain mindset, almost like a mental toughness to thrive in that kind of fast-paced environment.
Yeah, it definitely does. And we'll delve deeper into the psychology of trading later on. But before we get to that, let's decode rule number 9, candlestick patterns. This is where things get a bit visual, right?
Yes. And if you're enjoying this deep dive so far, don't forget to hit that like button and subscribe to the channel. We've got a lot more to unpack.
We do. Candlestick patterns are fascinating. They provide a visual representation of the buying and selling pressure on a stock during a specific time frame. Each candlestick tells a story. And learning to read those stories is a key skill for any day trader.
Okay, I'm intrigued. Tell me more about these candlestick stories. What kind of information can we glean from them?
So imagine each candlestick as a little rectangle with lines extending above and below. Figure 6.1 in the book provides a great visual. The rectangle is called the body, and the lines are called wicks, or shadows. The color of the body indicates whether the stock closed higher or lower than its opening price.
So a green candlestick generally means buyers were in control, pushing the price up. And a red one means sellers were in control, pushing the price down.
Exactly. And the length of the body and wicks can tell you even more about the strength of that buying or selling pressure. For example, a long green candlestick with short wicks suggests strong buying momentum, while a short red candlestick with long wicks might suggest indecision or potential selling pressure.
Interesting. So it's not just about individual candlesticks, it's also about the patterns they form over time. Like a series of green candlesticks could indicate an upward trend, and a series of red candlesticks could suggest a downward trend.
That's right. It's about looking for those visual clues in the charts to get a sense of the overall market sentiment and potential price direction. And Aziz breaks down several important candlestick patterns in the book, including bullish and bearish candles, spinning tops, dojis, hammers, and shooting stars.
Okay, those sound interesting. Let's start with the basics. Bullish and bearish candles. What can you tell me about those ones?
Well, figures 6.2 and 6.4 illustrate those for us. So a series of bullish candles, like in 6.3, typically indicates an upward trend, while a series of bearish candles suggests a downward trend. They're kind of like the building blocks of candlestick analysis.
So it's about recognizing those trends early on and potentially capitalizing on them.
Yeah.
Got it.
Now let's talk about spinning tops, which are a bit more nuanced. These are candlesticks where the body is small and the wicks are relatively long, like in figure 6.6.
So what does that tell us about the market sentiment?
Spinning tops often indicate indecision in the market. Where buyers and sellers are battling for control, they often appear during periods of consolidation or potential trend reversals, as shown in 6.7.
So they're like warning signs that something might be about to change. But we don't know for sure which direction the price will go.
Precisely. Now, doji candlesticks, shown in figure 6.8, are even more intriguing. They have a very small body or no body at all, indicating that the opening and closing prices were nearly the same.
So extreme indecision, like the market just can't make up its mind.
You got it. Dojis can signal potential trend reversals or periods of consolidation, and Aziz explains how to interpret them based on their position within a trend and the surrounding price action.
Wow. This is getting pretty detailed. It's like learning a whole new language,
Mm.
and we're only scratching the surface here.
I know. And we haven't even gotten to the specific trading strategies that Aziz outlines in the book.
Oh, wow. There's more. This is just the tip of the iceberg.
We've only just begun to explore the world of day trading. We've got a lot more ground to cover. But before we dive into those strategies, stay tuned for part 2 of our deep dive into how to day trade for a living. And while you're waiting, be sure to hit that subscribe button and check out other amazing content on the Book Summary podcast channel.
Awesome. We'll be right back.
All right, so welcome back, everyone. We are diving deeper into Andrew Aziz's How to Day Trade for a Living. We've covered those foundational rules, the importance of risk management, the basics of candlestick patterns. Now let's actually explore some of the specific trading strategies that Aziz outlines in the book.
Okay, I'm ready to get tactical.
Yeah.
There are so many strategies out there. It can be a bit overwhelming for a beginner. Where do we even begin?
Yeah, it can definitely feel that way. Aziz actually presents a variety of strategies, each with its own set of rules and patterns to watch for. But, rather than trying to cover every single one, let's focus on a couple that I think illustrate those key principles of day trading and also highlight the kind of analytical thinking that you need to succeed.
Okay, that sounds like a plan. So let's start with one that piqued my interest, the ABCD pattern. It sounds simple enough, but I'm curious to see how it actually plays out in real-time trading.
Yeah, the ABCD pattern is a classic for a reason. It's very visually intuitive and provides a clear framework for identifying potential entry and exit points. So essentially what you're looking for is a price pattern that resembles the letters A, B, C, and D.
Okay, I can visualize that. But how do those letters translate to actual price movements on a chart?
So figure 7.1 in the book gives a great visual representation of this, but point A is kind of the starting point of the pattern, often a swing high or low. Point B is a retracement against the initial move, so sort of like a pause or a pullback. Point C is a continuation in the original direction, and point D is that final leg of the pattern, ideally hitting a price target that's based on the distance between A and C.
Okay, so it's like the stock price is doing this little dance up, down, up again. And if you recognize that pattern early enough, you can potentially ride that last leg up to point D for a profit.
That's the idea. And one of the things I appreciate about Aziz's approach is he doesn't just present this pattern in isolation. He actually connects it to those broader principles of day trading.
Yeah, I see that in figure 7.3.
Yeah.
Where he actually challenges readers to identify the entry price, the time of entry, and the stop loss price for a potential trade. Based on this ABCD pattern forming on PCG. It's like a mini quiz to test your understanding.
Yeah, exactly. And that emphasis on risk management is crucial, determining your stop loss level. So the point at which you would exit the trade to limit potential losses, that's just as important as identifying the entry point.
Right. It reminds me of what we were talking about earlier about protecting your capital. Even if you're really confident in the pattern, you always have to be prepared for the possibility that the price might not move in the direction that you anticipate.
Right. No strategy is foolproof, and that's why having a well-defined trading plan and sticking to it is so crucial for managing risk.
For sure. So the ABCD pattern is all about recognizing these recurring price patterns. What about strategies that focus on more like momentum and trend continuation?
So Aziz covers a strategy called the bull flag formation, which often occurs during an uptrend. Figures 7.5 and 7.6 illustrate this pattern. It's called a flag because the price consolidates for a period, forming a rectangle-like shape on the chart before potentially breaking out higher.
So you're looking for a pause in the upward trend, but with the expectation that the price will eventually continue to climb higher.
Exactly. And just like with the ABCD pattern, the key is to identify those right entry, stop loss, and exit points.
Yeah, and I imagine that volume plays a really significant role here. Like a surge in volume could signal that traders are accumulating shares, pushing the price higher.
You're right. Volume is a crucial indicator. Aziz actually uses volume analysis in conjunction with technical indicators to confirm the validity of these patterns. And that's another really important point he emphasizes. No strategy should be used in isolation. It's really about using multiple tools and indicators to kind of confirm your trading decisions.
Okay, so it's like gathering evidence to support your hypothesis before you make a trade.
Exactly. Now, while the ABCD and bull flag patterns are examples of continuation patterns, Aziz also covers strategies that focus on reversals, where the price trend might be shifting direction. He refers to these as bottom and top reversals.
Right, and this reminds me of those candlestick patterns that we were talking about, like hammers and shooting stars, which can signal those potential reversals in price direction.
You got it. Those candlestick patterns can often be those early warning signs that a reversal might be in play. And figures 7.9 to 7.17 show examples of how these reversal strategies can actually play out.
So it sounds like recognizing these patterns early on can give day traders a pretty significant advantage.
Absolutely. But it's also important to remember that these are just indicators. They don't guarantee future price movements. It's always important to consider other factors like volume, overall market trends, and any kind of news events that are happening.
Right, so it's like putting together pieces of a puzzle, using all these different tools and indicators to kind of get a clearer picture of what's happening in the market.
Exactly. And that brings us to another set of strategies that focus on more of those broader market trends rather than just individual stock patterns. One example is the moving average trend strategy.
Okay, so this sounds like a way to kind of ride the wave of a larger trend, rather than focusing on those short-term fluctuations. How does that work?
So the moving average trend strategy, as illustrated in figures 7.18 to 7.23, uses moving averages to identify the direction of the trend and potential entry and exit points.
Okay, remind me what moving averages are again.
Yeah, so a moving average is essentially a line on a chart. That represents the average price of a stock over a specific period. Traders often use multiple moving averages with different time frames, such as a 50-day moving average and a 200-day moving average, to gauge the strength and direction of the trend.
Okay, so you're using these moving averages as guideposts to determine whether the price is likely to continue in its current direction,
Yeah.
or if a potential reversal is brewing.
Exactly. And the book actually explains how to apply the strategy for both long and short positions, meaning you can potentially profit whether the market is moving up or down.
Okay, I'm starting to see how all these different strategies can kind of work together. It's like having all these different tools in a toolbox. Each one has its own strengths and limitations. And a skilled trader kind of knows when to use which tool for the job.
That's a fantastic analogy. And just like a skilled craftsman would select the right tool for each task, a successful day trader chooses the appropriate strategy based on market conditions, risk tolerance, and their own personal trading style.
I love that. This is really fascinating stuff. I'm starting to see how much goes into becoming a successful day trader. But before we move on to some of the other strategies, I have to ask, it all seems very technical. Does Aziz address the human side of trading at all? You know, the emotions and the psychology that can really influence our decision-making.
He absolutely does. And it's one of the most valuable aspects of the book, in my opinion. In fact, rule number 10 in his list of essential rules is all about managing emotions in trading. He says profitable trading does not involve emotion. If you are an emotional trader, you will lose your money.
Wow, that's a powerful statement. It makes sense, though. You know, we all know that fear and greed can really cloud our judgment and lead to those impulsive decisions, especially when money is involved.
Exactly. And in the fast-paced world of day trading, those emotional impulses can be magnified even more. Aziz actually dedicates an entire chapter to trading psychology, discussing the importance of disciplined patience and controlling that fear and greed. He emphasizes the need to develop a trading plan and stick to it, even when things are getting really emotional.
It sounds like mental toughness and emotional resilience are just as important as those technical skills.
They are. It's about training your mind to stay focused and disciplined even in the heat of the moment, when prices are fluctuating rapidly, and you're faced with making split-second decisions.
And it's interesting how he actually connects this psychological aspect to a specific trading strategy, the break of high of day strategy. He tells the story of John, a trader, who achieved consistent success using this strategy. And he highlights the importance of discipline and emotional control in John's story.
Yes. And figures 9.1 and 9.2 really kind of tell John's story there. He was able to achieve consistent profitability by very meticulously following the strategy without letting those emotions cloud his judgment. It's a great example of how a disciplined approach and a really solid strategy can lead to success.
I'm really curious to learn more about this break of high of day strategy. It sounds intriguing. But before we go down that rabbit hole, let's pause here for a moment. If you're enjoying this deep dive into the world of day trading, hit that subscribe button. And stay tuned for the final part of our exploration of how to day trade for a living. We'll be back shortly to unpack more strategies and wrap things up with some valuable insights for aspiring traders. Welcome back to the show, everyone. So this is the final part of our deep dive into Andrew Aziz's How to Day Trade for a Living. And we've covered a lot of ground so far, from those foundational rules to candlestick patterns, and we even kind of dipped our toes into the psychological aspects of trading.
Yeah, it's been quite a journey. We've explored how, day trading is not about getting rich quick, but it's more of a disciplined approach that requires constant learning and adaptation.
Absolutely. And we've seen how technical analysis, Like identifying those patterns, like the ABCD and the bull flag formations, really plays a significant role in a day trader's arsenal. But there's still more to unpack, right?
Yeah, we touched on that moving average trend strategy, which uses those trend lines to understand price direction and potential entry and exit points.
Right, using those moving averages as guideposts. So are there other strategies based on, broader market indicators that Aziz talks about?
He introduces the VWAP strategy, volume-weighted average price. Think of it as the average price a stock is traded at throughout the day, but weighted by the volume of shares traded at each price point.
So a higher volume trade would have a greater impact on the VWAP than a lower volume trade.
Exactly. It kind of helps you see where the majority of the trading activity has occurred. Figures 7.24 and 7.25 in the book actually show how traders use this to gauge buying and selling pressure and potentially identify good entry and exit points. Illustrated in figures 9.1 and 9.2 highlights that importance of discipline and strategy. So the break of high of day strategy involves identifying stocks that are breaking above their highest price point of the day.
So essentially, you're looking for stocks that are showing strong momentum and are potentially poised for further gains.
Exactly. But, it's not just about jumping into any stock that's making a new high. You have to consider other factors such as volume, the overall market trend, and of course, managing your risk appropriately.
Right. It all circles back to those, those essential rules that Aziz laid out. Managing risk, understanding those catalysts, driving a stock's movement, and controlling your emotions.
Exactly. Those principles really underpin all successful trading strategies. And that actually brings us to another important aspect that Aziz covers, that more practical side of day trading.
Right. You can't execute those trades if you don't have the right tools. So what does he recommend for setting up a trading environment?
Well, Aziz actually provides a list of well-known direct access brokers on page 14. These brokers offer the speed and functionality needed for day trading.
Right. Speed is definitely critical when you're trying to capitalize on those fleeting opportunities. What about the actual trading platforms? Does he give any specific recommendations?
Well, he doesn't endorse specific platforms, but he does provide examples of popular ones in figures 5.1 to 5.4. He also emphasizes the importance of setting up your trading station with multiple monitors so you can track charts, news feeds, and your order entries efficiently.
So it sounds like having a really organized and efficient setup can make a big difference in your trading performance.
Yeah, absolutely. He even talks about utilizing hotkeys to execute trades quickly without having to navigate through those menus.
Wow. It sounds like day trading is as much about being tech savvy as it is about understanding market dynamics.
Yeah, it's definitely a blend of both, and that's what makes it so challenging yet so fascinating. There's always something new to learn and to improve upon.
Well, this has been an incredible deep dive into the world of day trading and How to Day Trade for a Living by Andrew Aziz has been a fantastic roadmap. Do you have any final thoughts for our listeners who might be, inspired to embark on this journey themselves?
Well, I would definitely echo what we've talked about throughout the entire episode here. Day trading is not a path to overnight wealth. It's a serious endeavor that requires commitment, discipline, and continuous learning.
Couldn't agree more. And remember, the book is just the starting point. There are tons of resources, online communities, and even mentors out there to help guide you.
Yeah, don't be afraid to seek out those resources, ask questions, and practice diligently. As Aziz emphasizes, the most successful traders are those who are adaptable, disciplined, and never stop learning.
Well said. So that wraps up our deep dive into How to Day Trade for a Living by Andrew Aziz. We hope you enjoyed this conversation with us. And if you did, please don't forget to subscribe to the Book Summary podcast channel for more thought-provoking deep dives into the world's most fascinating books.